Welcome to another episode of Buy, Hold, or Sell. In today's episode, we're going to take a look at Woolworths Holdings Limited, which is a South African multinational retail company that owns the South African luxury department store chain Woolworths and the Australian retailer Country Road Group. The South African division of Woolworths comprises of luxury goods retail, including fashion, homeware, and beauty products, with many stores incorporating a premium food retail offering. And standalone food stores and food stops are attached to engine petrol stations and located in urban areas. The company was founded in 1931 and it has employees just over 45,000. Mainly, the company is divided into three divisions, which is Woolworths South Africa, Country Road Group, and Woolworths Financial Services. So let's take a look at how the share price has fared over the past few years. So if we take a 1 day change in the share price, it was down 1.7, and in 5 days down more than 6%, 1 month down more than 9%, in 6 months. That's where we're gonna take a look and focus mostly on the 6 months period. The share price has lost 25%, more than a quarter of its value, and essentially year to date is also down more than 20%. And if we go to maximum, you can see the highs there since at least after COVID. The highs were at 78 Rand 30 cent. So if we go back to 6 months, you can see that the share price has just been going down, and down and down. And the reason could be essentially this results. We can see that almost everything is negative here. The only positive there you can see is the change in the the debt ratios, which have been improving. And then if we look at segment, Woolworths Food makes about more than 60% of the revenue, and it is the one division that has been doing well. Even when we go to the profit, it is the one that is doing well. The others are not doing so well. However, when we look at the update with respect to the turnaround of the Country Road Group, we can see that since the separation of Country Road Group from David Jones, which was disposed, there has been some changes and they are making a turnaround in that aspect. And so that brings us to the valuation. So if we go to the valuation, the current price is about 48 Rand 95. And then the target price essentially is the price that, as a value investor, you are willing to, you actually aiming at this price as the value of the company. and it serves as a reference of whether the share price is overvalued or is undervalued. So our target price is 64 and 19 cents, and so the potential loss, the potential profit or loss from this is more than 31%. And so the entry price, we have it at 52 rand 48. So the entry price, what we're saying here is if the share price goes below 52 cent 48 cent, then we will be willing to buy. Currently the share price is at 48 rand 95, meaning it is in a territory where we can essentially start shortlisting the company for buying. And then the exit price, meaning that we are willing to hold this share until it reaches the share price of 75 and 89, and then from there on, if it gets to this point, we are willing to sell. What we are saying is pretty much where it was at 79 rand 64. Once it went above 75 rands, we will be looking at selling this share. So essentially, having said that, yes, the Australian business is struggling. However, there are some improvements. The South African fashion, beauty, and home business still is struggling. And then you have their main division, the one that is carrying the business, quality Woolworths food, which continues to do well. So 60% of the business is quite profitable, and the revenue is growing, while the rest is struggling. However, if there are very few department stores of this quality, we have seen over the years the likes of Pick and Pay trying to replicate the Woolworths model, and it has struggled. So there's this ShopRite, obviously, with the Checkers brand trying to eat Woolworths lunch, if you can put it like that, and actually challenging Woolworths when it comes to the that market of middle class and high earners, people who are willing to spend more money on food and groceries. So essentially, Checkers is challenging Woolworths food. However, at this price of 48 rand 95, we feel that there is value in this share, and more than there are very few opportunities of buying Woolworths, and this could be one of those. It's first time the share price since 2021. For the first time, the share price has gone under 50 rands. First time in over 4 years, this share price has gone under 50. So I think we are looking at essentially one of the best times to buy the stock, the share. So my recommendation is you should definitely buy this share. Reason being, we feel that it's undervalued, and it does offer quality and protection over time. So the if we just look at the dividend yield here of about 4.5%, this is pretty good. It does have good cash flow generation, and you'll be able to earn a yield of slightly over 4%. So it is a good time to buy Woolworths shares, and you should go ahead and buy it. Having said that, it's a good buy. We will catch you up next time.